Inflation has peaked, rate cuts are off the table. I'm going to dive into the latest inflation report, and you will see why experts are saying inflation has peaked. For example, CPI was 4.2, the last report is 3.5, core is 2.9, last report was 2.6, the last PPI report prior to the last report was 6%, then it came to 5.5%. The monthly CPI was positive 0.5, this last month it dropped to negative 0.4, biggest drop in years. Gasoline on top of that has dropped about 50 cents plus since the Iran conflict. The things are starting to calm down, even though we're still in the conflict. The overreaction of gas going up and gas coming down is starting to relax and chill out a little bit. The biggest risk going forward that could spike inflation again is the Iran war, any tariffs, wage growth, and any more inflation data reports that start to spike something out of the ordinary. Oh, and by the way, my name is Simpson. I focus on one to four unit financing. That means I help people buy or refinance one to four unit properties, whether it's a primary, second home, or investment property. I am your guy. You could be a first-time home buyer, a self-employed person, a real estate investor. We do it all. I've been doing this about 22 years. We've helped over 5,000 clients, funded $1 billion of loans, and I make videos like this just to help dumb down all the noise and craziness that's out there when it comes down to interest rates, the market, the economy, inflation, all this stuff. So continue to watch. Please share this with somebody. Any comments, let us know. Any topics that I can talk about, please reach out. If you want a copy of the latest inflation report, click below in the description of the inflation report and we'll get you out a copy. If this war can either find a way to end and gas comes back down to under $3 a gallon, which would be huge, and inflation reports are starting to still show signs of cooling, hikes could be off the table, and the feds could even start talking about, maybe we're going to have to think about cutting rates. Many economists are coming out and saying inflation has peaked. If we look at the website, which tracks 15 million data points per day and gives a live trueflation report, it's around 2.06 today. That's really what we should be focusing on. And a lot of you might wonder, how is inflation broken down? And I'm going to break down CPI because that's what's affecting consumers, consumer price index. And remember, before the pandemic, prices were much lower. Those prices of gas, housing, insurance, and food that have gone anywhere from 20% to 40 to 50%, in that range, those are not the things we're talking about coming back down. When we talk about inflation slowing or coming back down, that means the cost of things not rising as fast. So the good old days where the burrito was $5 or the cost of your auto insurance was $80 a month and now it's $160 a month, those days might be behind us and that really sucks. But I'm talking about inflation today so prices don't continue to spike like they were out of control during the pandemic. So what's broken down the CPI and how do we get that number? Well, let's dive into it. We've got shelter, housing is 35%. Food is 14%. Medical is 8%. Cars is 7%. Gas is 4%. And everything else that you can imagine under the sun makes up the 32% that combines that number. And that is what's looked at month over month to see how we're doing as a nation. Is inflation going up? Is it staying flat? Or is it going down? If you want rates to drop, you want inflation to go down. You're also, let's be honest, as we all know, as I mentioned prior, that after the pandemic, everything has gotten more expensive. So when we're talking about inflation going down, we're not talking things are just going to change right away. But at the end of the day, rates coming down, and that's why we're making this video to talk about it, because we all care about housing and we want rates to go down. And even Warsh mentioned that rates were too restrictive for housing, which is a good sign for us. But what is standing in our way from getting rates lower to getting maybe a rate cut is we need inflation, we need the jobs report, and we need the consumer to keep showing signs of decline in this economy. As I talk about that, you're like, Kenny, that doesn't make any sense. Inflation going down is a great thing, but the jobs market kind of crumbling, that's not a good thing, I agree. And also the consumer weakening, that's not a good thing, I agree. But remember, if those things are starting to decline, that means we do need to cut rates. We need rates to go lower because affordability is just not working. And we all know we live in the same world of the United States, right? If we're watching this video, we might live in different parts of the world, but we know that when you go out to eat, it's a lot more expensive. When you go to the grocery store, it's a lot more expensive. When you get auto insurance or home insurance, it's a lot more expensive. When you fill up your car with gas, it's a lot more expensive. When you travel, it's a lot more expensive. So we all live in a world, whatever we do every day, everything costs more money, and we just want that to slow down and not keep going as much as it did in the past. But we also know that affordability, interest rates that are in the mid to upper sixes now, we'd prefer those to be in the mid to lower fives. But we're not going to get there if we have an Iran conflict going on and potential more tariff talks coming on board. And also if inflation and the jobs market and the consumer, if it's going gangbusters, we will get rate hikes instead of rate cuts. So in a slowing economy, slow inflation, slowing consumer spending is what we're starting to see. There's most likely rate hikes are off the table. Rate cuts are going to be a part of the talk. We have to see this trend continue. And we'll have to monitor Iran. That's going to be at the forefront of all this. It will trump all the data and all that stuff for now, because until that gets resolved, we might just be dead in the water. But don't count out that if inflation keeps dropping, if a job market keeps weakening, a consumer keeps weakening, the feds are going to talk about it, they're going to watch it, and they might have to jump in to do something about it. If I can help you guys out, please reach out. Let me know. My name is Kenny Simpson. Thanks for watching. We'll see you guys next week.